Cam, whenever you're ready,
Yeah.
you could take over.
Yeah, no, I would just thank you, Thomas, for kindly preparing, first of all, the bibliography of all the cybersecurity research, academic research with implications in accounting and auditing, and that's been circulated to both the task force and working group for your reference and review, and also for this presentation. As mentioned in my email, I know, Thomas, you've prepared some areas in the latter part of the presentation where you hope to be able to engage everyone in a little bit of a discussion as well. So back to you, and thank you very much.
Well, I'd like to thank Cam and the entire group for giving me the opportunity to chat with you. As I usually do in my classes, I usually do a polling right about this time to ask if everyone can hear me. And if you can hear me, just do a little shake head or wave hand or something to indicate that I'm coming through clearly. The second thing that I usually do right about this time is to verify that everyone can see my screen. And I'm currently not in presentation mode, so I will go into presentation mode. What we're going to do today is to talk about cybersecurity and some implications for the accounting profession, particularly from a regulatory perspective. I have made a few changes to the deck that I sent you, Cam. I will resend it after the presentation. What I plan to do is to first talk about cybersecurity fundamentals, and then get into a discussion of issues where there could be an overlap between cybersecurity in all of its forms and, of course, the work of a professional accountant or the work of an accountant that works for a preparer or an internal auditor. So we will focus on those issues towards the end of the presentation. Having said that, I should start off with the fact that many years ago, when I worked in business and in public accounting, the accountant occupied a central role in organizations. The accountant had all of the information. And so you could think of, I often think of the accountant as being one of the first people in the early years of professional accounting. I often think of accountants as one of those persons who exhibit what the new golden rule is. He who has, or she who has the gold makes the rules. So accountants literally had all of the gold, all of the information. And that information was literally kept on the lock and keys. I recall working for a bank many years ago, and at the end of every day, my staff had to put away every single book into a secure vault. No one except myself and my assistant had keys to that vault. Of course, we had a little weakness there in the sense that if I went in and took out any book, my assistant may not know. If my assistant walked in and took out any book, I may not know. So we had 2 keys, and that was it. But with 2, you had some in fact, a great deal of accountability and limited space or limited opportunities for bad people to get into my vault. Well, today's environment is very different, very, very different. The vault is virtual, and the vault could be accessed literally by anyone in the world from any location in the world, as long as that person has a virtual key. It turns out that that virtual key can be shared. That virtual key can be phished. That virtual key, to a very large extent, can be fabricated. So it is a different world. And it is a world with perhaps a lot more data and a lot more value attached to data. So in that context, when you think of accounting as operating in that type of environment, bear in mind that we have a responsibility to assure that the data and information of an organization are protected. Bear in mind that every accounting system that exists out there is going to exist in an application. The application is going to sit on an operating system. The operating system is going to operate to a very large extent in a networked environment. It so happens that the network environment that we work on today is interconnected across the world. If we go back to about 1966, when there were computers, they were not necessarily networked to in fact, they were not networked. They were all connected with hard wires. And back in those days, there was still the belief that accountants need to protect information security. You go to the 70s and there was more discussion about the need for accountants to protect information security. You come to the modern age and literally starting about 1998 all the way to the present, the AICPA has said that perhaps one of the #1 issues facing the accountant is information security. So to start off, I just want to emphasize that information security is hugely important in our business environment and our accounting environment as well. A lot has been written about cybersecurity, and in the bibliography that I sent you a list of what has been written. It's not an exhaustive list, but it's a sample of what has been written. And you will notice that many different points were touched. One thing that is emerging as a consensus today, the accountant does have a role to play in cybersecurity. Another thing that is emerging, it wasn't always that way, even after SOX 2005, it wasn't that way. That is the internal control system of an organization will be affected by the organization's information security. Back in 2005, 2003, 4, 5, when accountants first started expressing opinions on the effectiveness of information security. Sorry, internal controls, not information security. When accountants first started expressing opinions on internal controls, information security was literally outside of the scope of the accountant's work. That always was interesting to me because of the nature of data and information in organizations. Basically, we all know the adage, garbage in, garbage out. And so going all the way back to 2003, 4, 5, when accountants would literally not pay a lot of attention to information security, going back to those days, there was still a group of individuals who believed that accountants should pay attention to cybersecurity risk. Now, we are going to emphasize ethics in particularly the second part of this presentation. One of the reasons we should have emphasized ethics is because it's very, very important. And secondly, very little has been written about ethics in the context of cybersecurity risk. Now, to understand why cybersecurity might be so important to the accounting professional, I present you with these statistics here. I'm not going to read through every one of them, but one of them that I thought that I should highlight is this one right here. Oops, let me turn to presentation mode. That way I can highlight. So excuse me a second. Okay, I'm in presentation mode right now. This statistic here, 95% of cyber breaches are caused by human error. 95%. One of the things that accountants did back in 2004, 2005, with the emergence of the emergence of the Sarbanes-Oxley Act, one of the things that they did is that they assessed the qualifications and the background of individuals who were involved in the financial reporting system. That's one of the things that they did. But at the same time back then, they didn't check to see whether or not those people who were involved in the internal control system had any background in or understanding of cybersecurity risk. Another thing I want to emphasize here is that there are approximately 300 billion passwords that are being used by humans. Passwords happen to be the most prevalent approach to securing computers and to securing data. Let me emphasize a couple of things before we move on. Whenever we talk about information security or cybersecurity, depending on who you speak with, we're talking about three very important things. We are talking about confidentiality. We are talking about availability. Oops, excuse me. We are talking about availability, and we are talking about integrity. So you may often hear of the CIA triangle: confidentiality, integrity, and availability. Basically, what has been done throughout the computer age, we have used very often something that you know to protect confidentiality, integrity, and availability of information systems. Something that you know would represent a password. For a while, we also use something that you possess, a token. Many of you may have used those tokens where you have a random number, and that random number has to be entered into the computer within a few seconds before you're given access. Today, many of you have a phone, a smartphone, and you receive confirmation codes via that phone. So something that you possess, something that you are, a biometric. Interestingly, biometrics, with the proliferation of smartphones and the use of fingerprints on those smartphones, or facial recognition on those smartphones, biometrics are becoming a lot more prevalent. Biometrics would represent something that you are: your fingerprint, your eye scan, your face, your gait, even the odor that your body gives out. All of these could be used as biometrics. But for the most part, there were two issues historically, or two problems historically, that we have had with regards to protecting confidentiality, integrity, and availability in the context of these three forms of authentication. We tended to use only one of those. So something that you know, only a password was being used. And today, in many organizations, only a password is being used. Fortunately, also emerging is a combination of these things being used. Something that you possess, something that you are, and something that you know. This is referred to as multi-factor authentication. And multi-factor authentication is becoming more prevalent because of the existence and proliferation of smartphones or smart devices. But bear in mind that notwithstanding the fact that you have something that you know, something that you possess, or something that you are, to protect data and information, bear in mind that you could have several different information security threats that could literally interrupt what we would expect. In fact, what we expect is a clean communication line between, let's say, Bob and Alice. Bob could be a device, Bob could be any kind of entity, and Alice could be the same. We want clean communication lines. We do not want any kind of deviations. We do not want any kind of third party. So this is our normal flow. Flow number one. Flow number two, in fact, figure number two here, that figure illustrates an interruption. It is an interruption of availability. Many of us have been affected by a lack of availability. Ransomware attacks are designed to block availability. And so companies are asked to pay millions of dollars in Bitcoin or in some sort of digital currency to assure that the break here no longer exists. Interception. Now I'm going to introduce this new guy here, Fred. We don't have any Freds in the audience here, so that's good. Fred is a bad guy. Fred wants to find out what's going on in the databases of Alice and Bob, or perhaps in just Alice or just Bob's database. And so Fred sets up an interception channel. Fred could do this in many different ways, but one of the more popular ways that Fred uses is phishing. Or if it's a big target, somebody with a high degree of importance in the organization, we might call it whaling. Or if Fred is using, let's say, social media to conduct his social engineering, then we might call it smishing. And so Fred comes in, Fred intercepts everything that is going on between Alice and Bob. And of course, we do have a violation of, at the very least, confidentiality, at the very least. Very often, what happens here is that Fred would intercept data, collect the data or information that he or she wishes to have, and then uses that information in a much more focused way to either harm the organization very directly or to harm the organization indirectly. Modification of all of these items here, all of these threats, 1, 2, 3, 4, of all of these threats, modification is perhaps the worst or potentially worst. With modification, Fred simply accesses the company's databases, accesses the company's communication channels. But what Fred does, in addition to snooping, what Fred does is that Fred modifies the data on the company's databases. And so what you end up with is data with no integrity. In fact, this is becoming a huge issue in contemporary computing. Basically, there is something called data poisoning, where Fred will deliberately add false data to the databases of Alice or Bob. And when they act on that data, of course, they're acting on garbage. But that garbage is malicious garbage, which was deliberately placed there. Think of the financial reporting system. Think of an accountant who prepares financial statements based on data Fred has modified or data that Fred has poisoned. Well, once again, your financial statements, your data, your information would be all garbage, potentially all garbage. But it's coming from the system. So that accountant is simply saying, hey, I prepared the financial statements based on the available data. The question arises, is that accountant preparing the financial statements in accordance with GAAP? Has that accountant violated any of the ethical principles? The accountant followed GAAP. The accountant used the data on the company's database. And so this kind of modification or this type of threat is a very significant threat. What is most interesting about this type of threat, as well as interceptions, what is most interesting is that these threats tend to be surreptitious. Nobody knows that they might be happening. And so that accountant who prepares the financial statement, he prepares the financial statement and could be totally unaware, particularly if we are dealing with a very large organization, can be totally unaware that the data have been fabricated. Now, there is an important ethical question. Should the accountant take the data that comes out of the information system at face value? That's a big ethical question. And so we will talk about some of these towards the end. Another threat is the threat of penetration or fabrication. In this case, Fred does not rely on a communication channel between two bona fide parties. Fred essentially penetrates the company's system or a company's system and fabricates whatever he or she wants. So in essence, what you're seeing here in these 5 diagrams, what you're seeing is evidence of or issues associated with confidentiality, integrity, and availability. There are 4 basic measures that are used by businesses and information security specialists to manage cybersecurity risk. The 4 are proactive, reactive, risk transference, and education. Now, if 95% of cyber threats are essentially derived from human error, then it speaks to the fact that education would be very, very, very highly important. Now, one of the things that I always point out, doing nothing is an option, but it would be a very costly option to pursue, a very costly option. So in essence, this option, although it's on the table, we are not going to pursue this option. Here's an example that's taken from one of my publications of how these 4 different measures might be implemented. I did this in the context of tax data security, but you can see that some of the proactive avoidance measures will include encryption, blockchain and smart contracts, access controls, particularly through multi-factor authentication, email filters, federal and state laws, etc. Then reactive measures will include data security analytics, intrusion detection, incident response planning, personal access control, and authorizations. All of these have one characteristic in common. They are implemented by the entity subsequent to an event. And then risk transfers. Risk transfers could be cyber insurance or outsourcing. About 2 years ago, I did a presentation at University of Waterloo. And the presentation was about cybersecurity risk disclosures. One of the items that is disclosed, albeit not very frequently, is cyber insurance. It turns out that there was a tremendous amount of interest in cyber insurance. Now, with the recent events, you probably would understand why. When a company is hacked and the company's information system is taken over by a hacker who asks you to pay a ransom, that's not an easy thing to deal with. On the one hand, you can pay because your insurance company is going to say to you, pay up, because the cost of not paying up and trying to recover everything on your own is going to be way too high. It's going to be higher than the cost of paying up. So that's a huge issue. It's also an ethical issue. What should the accountant advise his client or her client if that issue should surface? So cyber insurance is one means of transferring. Outsourcing IT and IT security is another means. And then, of course, education. You could have preventive education, incident response planning education, and general education. Now, one of the things that I should point out is that incident response planning, which is listed among reactive measures, that could be proactive. Okay, so it could be classified as proactive, but an incident might arise, or incident response planning might be executed only after an incident arises. There are some incidents that are outside of the control of management, but nonetheless, having said that, it is always important as both a preventative and response approach to have some sort of incident response planning process in organizations. Now, here are some observations about cybersecurity risk and cybersecurity threats. Some of these, at least the general titles, some of these came from an article on Kaspersky.com. Some of the others are just based on my experience and observations. First thing I want to point out, remote work accentuates cybersecurity risk. Remote work accentuates cybersecurity risk because of at least two reasons, two very, very important reasons. One, there are blurred lines between corporate data and personal data and personal information system. As a matter of fact, in many instances, remote workers use their own devices, which may not necessarily be approved by the organization to conduct work. Okay, so that's one of the issues, those blurred lines. The second big issue with regards to remote work is that the more access points that you have, particularly access points that are not necessarily well protected, the more opportunity that you create for malicious actors. So in essence, remote work is making systems, information systems, more vulnerable. The Internet of Things, that's another big issue that's coming up. The Internet of Things simply add vulnerability. Internet of Things tend to be a lot less effectively protected than, let's say, your regular database, because people do not necessarily see those Internet of Things as part of your information system. And so a weak point in an information system might be the Internet of Things. There is a prediction that I saw somewhere, I can't recall where I saw it, but in essence, by 2026, there will be about 8 IoTs for every living person in the world. That is huge, and it just means that there are more entry points for mischief. Ransomware attack. Now this is probably one of those that pops up in the news almost on a daily basis these days. In fact, this morning I came across another one. But these things could be costly and they could be deadly. For some reason, the healthcare system is one of the systems that is being most frequently attacked by ransomware. And it's possible that they're more vulnerable. It's possible that they are easier to attack, but they tend to be most often attacked by ransomware attackers. There was an incident which I've described here back in 2020 when a German hospital lost a patient because of a ransomware attack. You could think of other organizations losing very, very important assets and resources because of ransomware attacks. Colonial Pipeline, JBS Foods, AXA are all examples of organizations that have lost a lot as a result of those attacks. In fact, the AXA case is very interesting. After AXA announced that it will no longer provide ransomware insurance, they were attacked by ransomware attackers. The ubiquity of cloud computing or cloud services really, really increases vulnerability. Now, I have listed a few areas, but cloud computing, pretty much like remote work, which frequently uses cloud computing further blurs the lines between data in the cloud and data on personal computers. And once again, that adds to vulnerability. It adds to the problems of privacy. It adds to the problem of essentially attack points for bad actors out there. Social engineering attacks are getting smarter, and we now have phrases like, or words like phishing, whaling, smishing, which I've talked about, which are becoming part of the contemporary lexicon. Greater legal and regulatory demand for data privacy. And where this comes in is that in the US, we have a patchwork of federal and state laws on privacy and data breach reporting requirements. That adds a lot of burden to organizations. Imagine if you're an organization that works across the entire United States and perhaps in Europe as well, and you have a data breach. credit card companies frequently represent that type of organization. You have reporting to do in every single state. And in some cases, the reporting requirements are different across state lines. Now contrast that with the EU, where GDPR, which is a comprehensive legal privacy legislation regime that applies across all sectors and to all companies, regardless of size. So that makes it a little easier, but at the same time, that type of requirement adds to the burden of doing business. Multi-factor authentication is improving, and you are seeing more use of something that you know, something that you own, as well as something that you possess. Something that is also increasing here is more use of what I refer to as continuous authentication, which is authenticating a user not just once, but multiple times throughout a session. And those times between, or the times between authentication could be very, very narrow or a little wide. Nonetheless, the narrower that authentication time becomes, the more continuous the authentication process becomes. Mobile is the new battlefront. Data poisoning is a growing and potentially highly disruptive threat. Bear in mind, I mentioned data poisoning a while ago. Data poisoning is a huge problem because we could build systems, smart systems, with poisoned data. In other words, we could end up with garbage in and garbage out. Data poisoning, as I mentioned before, could extend to financial reporting data and financial reporting systems. Imagine an organization reporting to the SEC or to some other regulator data or financial statements that are based on poisoned data. I don't think the SEC is going to say, wait a second, you're forgiven because you didn't know your data was poisoned. Now, one huge trend that we should all be aware of, and accountants in particular should be aware of this because of the pervasive impact of this particular issue and the potentially pervasive impact on financial reporting systems. Attackers are now attacking service providers. So a service provider who provides, let's say, very focused service to a small group could essentially end up impacting thousands of other users. In fact, millions of other users. And this case here, the Keziah's case, is one that illustrates this issue. This was published in the Washington Post, and I just have a brief excerpt from it. You could take a look at it, but the bottom line is that this service provider, Keziah, they provide VSA software, virtual system administration software. 40 customers they believe were affected, but the effect was cascaded. Interestingly, a grocery chain in Sweden was affected by that Keziah software breach. Cybersecurity disclosures is one of those issues that is becoming more commonplace, and it's an area where accountants have been focusing. The US SEC expects registrants to disclose cybersecurity risk. There are two common types of risk that are disclosed, although there are others, but the two most common are risk of service operation disruption and risk of data breaches. Those risks are usually disclosed in item 1A. That is the risk section of the 10K report. You may also find those risks being disclosed in item 1, which is business information in general, and item 7, which is essentially selected financial and qualitative data. You do not see as much in the section of the 10K report where the accountant speaks to internal controls. Length of cybersecurity disclosures are increasing. Cybersecurity risk is typically, as risk disclosures are typically associated with the SEC guidance. Guidance came out in 2011 and 2018, the type of industry. So for example, highly intensive or businesses or industries that are highly information intensive tend to do more disclosures than non-highly intensive industries, non-highly information intensive industries. There is a growing trend towards more cybersecurity risk. And as the trend increases as a whole, the trend of cybersecurity disclosures also increase for all companies in general. Now, one of the good pieces of news on that front is that companies are disclosing more. But those disclosures, because of the technical nature of information security, those disclosures are becoming more difficult to read. You're also seeing, in some instances, more litigious language being used. Global companies that file 20F reports tend to provide longer and clearer disclosures on cybersecurity risks. And then I should point out that the SEC uses comment letters to nudge registrants to make better cybersecurity risk disclosures. One of the excuses given by companies when they are contacted by the SEC through a comment letter is that the cybersecurity incident was not material. The SEC generally does not believe that, and so there is always a follow-up comment letter. But at the same time, it brings up a very important ethical issue. Should an accountant participate? I'll use that phrase. Should an accountant participate in an excuse which essentially emphasizes materiality on a cybersecurity disclosure issue? The reason that question might be germane is simply because of the cascading effect or potential cascading effect of cybersecurity breaches and cybersecurity incidents. So when a firm says, or a registrant says, a cybersecurity incident was not material, that may or may not be true, particularly in the context of the cascading effects of cybersecurity. Now, all of what I've discussed here will have implications for accounting professionals. Very directly, as accounting professionals, as an accounting professional, one has to subscribe to the fundamental principles. One has to subscribe to appropriate professional behavior. And also one has to subscribe to independence as defined by the IASB Code. Here are some issues that I wrote down as I thought of discussing this issue with you, or those issues with you. I wrote down those issues from three perspectives. One, management and the preparer's perspective. 2, the auditor's perspective, external auditor's perspective, and 3, the internal auditor's perspective. So here is an issue here. A company, management that is, where an accountant works, presumably, violates the laws and regulations related to cybersecurity. Well, that brings up the issue of appropriate behavior. An accountant who participates in violating the laws is not participating or is not complying with the code. Failure to disclose cybersecurity incidents. An accountant fails to disclose cybersecurity incidents. Is this an ethical issue? How might the code touch on this issue? Okay, everyone is just like my students. Perfectly clear or perfectly confused. Not sure which one it is. Then deficiencies in cybersecurity risk disclosures. I gave you the example of companies indicating that the reason that they did not disclose a cyber incident is because they thought that the incident was not material. Not reporting the incident is, according to the SEC and some other regulators around the world, it is a deficiency. The excuse being it's not material. Well, is there an ethical issue here? Failure to consider the impact of cybersecurity policies and practices on internal controls. I do not believe that this failure exists as much today as it did, let's say 20 years ago. 20 years ago, even public accountants would not consider cybersecurity risk issues in the evaluation of internal controls. Misleading response to an SEC comment letter. That brings up a huge ethical issue. Failure to provide a support training for staff and professionals in the area of cybersecurity risk. 95% of all incidents are caused by human failure. Also, this brings up the issue of competence. The next perspective is the internal auditors. Let's assume that the internal auditor provides no assessment of the effectiveness of cybersecurity in the financial reporting system. Potentially, that's a huge issue. Material participation in the design, creation, and execution of cybersecurity policies. Hey, who wants to be an auditor, an internal auditor or an external auditor that audits his or her own work? The code speaks to this independence issue. Unaware of cybersecurity risk management measures deployed by the company. Well, this too is a huge issue because it speaks to issues such as competence. It may very well speak to issues of confidentiality and integrity, etc. Offers no cybersecurity risk training for staff and professionals. Well, a very important aspect of internal controls is the qualification of people who are in charge, of people who are actually doing the work. shares information about a cybersecurity breach with the press. What do you think of this one? David, I see you have somewhat of a slight smile on your face here.
Sounds like I turned my camera on at the wrong time, Thomas, doesn't it?
Yeah, this one is a clear violation of the fundamental principles. This is a privacy issue. It's also an integrity issue. Shares information about a cybersecurity breach with a family member, the same type of issue here. And then sell stock after a cybersecurity breach, but before the company makes information about the breach public. Well, in the United States and in many other countries, this is illegal behavior. This is insider trading. And the SEC specifically speaks to this in their 2011 and 2018 guidance. A company should not, or executives within a company should not be trading on information security. Now, you could, to a certain extent, as an insider, you could register and you could wait for the information to become public and then you trade. Okay? But is it ethical? Independent auditors, and I have a longer list here. The independent auditor, in the scenarios that I have here, audits financial statements after advising a client on cybersecurity risk management processes. Does this violate the code in any way? Cam, you have a little smile on your face.
Oh, yes, I would say that it would be an ethical issue to consider.
It would be a very significant ethical issue. It could affect many of the independence guidelines that you have. And the big item here is the potential of self-auditing. So that's a huge risk. Member of the audit firm who serves on the audit team is also contracted by the client to provide cybersecurity services. How does the code interface with this particular issue? How does this issue interface with the code? This is one of those issues that firms will have to address, because many of the firms are consulting in some of those spaces. And if a member of your audit team also provides services, you might say that, oh, this individual is on the audit team because of his familiarity with the highly technical systems in the organization. But at the same time, is it something that should be condoned by the profession? Is it something that is ethical? Provides no cybersecurity risk training for staff and professionals. That we have talked about before. That's a violation of the code, could be a violation of the code. Evaluates internal control, but excludes cybersecurity from the scope of the evaluation. This used to happen in the early days of SOX. In fact, it may still happen in certain organizations. The accountant is very focused on the financial information system or the financial reporting system. And traditionally, what accountants have done is that they audit around the computer. They do not audit the computer system directly. And so all of the general controls that might be affected by cybersecurity risk issues could very well be ignored when the auditor audits around the computer. So this is a huge one. It is one that may not be thought of as an issue very directly, but indirectly, this is the outcome that you're going to have. The accountant audits around the computer. The accountant ignores the underlying nuances in the cybersecurity system. And so the accountant ends up, to a very large extent, excluding significant cybersecurity risk from the scope of the evaluation. Now, the way the standards are written, the auditing standards are written, the accountant might not be wrong in ignoring the cybersecurity risk, particularly the nuanced aspects of cybersecurity risk. But should the accountant ignore those things? Discloses confidential information about a cybersecurity breach at an audit client to a partner in the audit firm. Is this one an ethical issue? In my mind, it is. It really depends on whether or not that partner has a need to know. If the partner does not have a need to know because the partner is uninvolved in the audit, whether or not the partner works for the firm, that is a confidentiality issue. Relies on an incompetent third party, perhaps a friend, for a SOC audit of general controls over the revenue and expenditure cycles. Well, general controls include information security. Advises the client to pay a hacker who orchestrated an attack. Well, the motivation here is that the auditor wants to get the audit completed. And so there is a ransomware attack. The auditor says, go ahead and pay it as soon as possible so I can complete the audit. That has ethical implication and promotes the audit firm as a firm with a perfect record in helping clients prevent cybersecurity attacks. That's probably a lie. Okay, so how the auditor promotes the audit firm in the context of cybersecurity attacks could be an issue with ethical implications. In conclusion, I do want to point out that auditors and accountants are not necessarily trained or well trained in cybersecurity risk issues. And so because accountants are not generally trained in the area of cybersecurity control assurance, it is not clear whether they are familiar with the potential intersection between cybersecurity risk and each of the following aspects of the code: integrity, objectivity, professional competence and due care, confidentiality, professional behavior, and independence. The implication that we have of not being fully aware of that overlap can be costly for individual accounting professionals, and it could also be very costly for the profession as a whole. So this is what I wanted to leave you with. I am starting